What's up, fruitful investors? In this video, I want to talk about a really cool strategy to grow your real estate investing portfolio very quickly, and that is the BRRRR strategy. Buy, renovate, rent, refinance, and repeat. Take your money and move on to the next property. So if this makes no sense to you, I'm going to break it down right now on paper so you can see exactly how this works and how you can use it to really scale your business very quickly. So the number one most important thing you want to do, I already wrote it here, is you want to buy under market value properties, ideally, so that you can buy under market value, renovate it up to the new ARV, the after repair value, which I'll get to in a second, and refinance and pull that money out. So these don't always have to be under market value. Like I said, ideally you really want to get them, but you can't always do that. For example, in my market, it is a very hot market, definitely a seller's market. If you don't know where I am, I'm 1 hour south of Toronto, Canada. So you can imagine how popular this area is. I can't always get, off-market deals or under-market deals, specifically when I'm doing a duplex conversion, which again, I'll get into how that works in here. But those are my favorite properties to do the buy, rent, renovation, refinance, and repeat, right? So these properties for the duplex conversions are very specific. They have to have a separate entrance. They have to kind of fit the model to have the ability to be a duplex. They have to be in a specific area. So I can't always get off-market deals for those, even though I do a lot of marketing for off-market deals to do flips mostly. When it comes to duplex conversions, I gotta pick it off the MLS. So that means I'm paying market value pretty much for those properties, right? I'm competing with everybody else. I gotta pay the market value. But it still works for those duplex conversions because we're adding so much value, because we're changing the use of the property. Again, I'm kind of getting ahead of myself, where I'll talk a lot about that in this video, but I just want to break down that it doesn't always have to be under market value, but like I said, ideally, that'd be cool. That'd be really great and make it a lot easier to get more money back. So number two, I'm going to the duplexes now. If you're not buying under market value, or even if you are, what you can do is change the use. So this really adds a lot of value. So the easy way is just buying a single family property under market value, renovating it to the higher value, and then it's super easy, right? With these, if you can't do that because you're not getting off-market deals, move to here and change the use. This changes the whole game plan of the pricing of the property. So like I said, if we do a duplex, right? We're buying a single family property off the MLS at market value. That sucks, right? So we think. What everybody else doesn't know is that I'm looking on the back end for the zoning. Can the zoning be a duplex? Is there a separate entrance? I know all of this while the other home buyers don't. So while they're throwing, decent offers, I'm going in at market value, cash, firm. And usually in my market right now anyway, I'm beating all of them out. So everybody thinks I look like an idiot because I paid all this, overpriced value or whatever, but really I didn't, because I knew that I was going to turn it into a duplex. So I got 1 unit here, 2 units here. So I'll talk about it coming up. I'll show you the numbers on how this works and what we're doing for the average deal. But if you can change the use of the property, this is a really great way to jack up that value so you can refinance and pull that money out. The third thing you want to do is, when you do either of these strategies, just buy single family property, renovate it, or change the use like this, right? You want to get market rents before you go to refinance that property. So this is especially true for multifamily. For single family, it doesn't really matter for the appraisal value. It'll help a bit. But if you're doing multifamily like this, as a duplex or a triplex or fourplex, you definitely want to get it rented first before you go to your mortgage broker and say, hey, Mr. Mortgage Broker, I want to get a new mortgage on this property. Can we send out an appraiser to get the appraisal value? Get it rented first at the market rents or even above market rent. So when the appraisal guy or girl goes there, they're like, what? You're getting $1,800 for this main floor duplex? That's crazy. That's way above market value. And is renovated super nice. They're gonna give you the value most likely of what you're asking for, which I always ask for a little over market value, so that even if they come down, they land on market value thinking they stuck it to me, but I still got what I wanted, right? That's another trick I talk a lot about on this channel for getting that appraisal value, but you wanna get it rented first, okay? So then what you do is that you get it refinanced at the top value I just said, which I'll go into some numbers right now. So renovate it, under market value, change the use or renovate it, get it rented for market rents or higher, then call the appraiser in to get it refinanced. And this is how it works. Because you're probably like, Matt, you've been talking for like 5 minutes. It makes no sense. Okay, let's break it down. This is the average duplex conversion that we're doing like all the time. It seems like we're buying like one a month lately. This is how we're doing it. We're buying a single family property, like I said, just a single family property for $400,000, give or take, $395, $400, $410. That's kind of the range we're buying these single family properties in. And again, it's a very hot market. There's like a lot of buyers, right? 5, 10, almost 6 offers sometimes on these single family properties. But the savvy real estate investor rolls up. I'm number 7. I come there, I put a cash offer at market value. The seller's like, holy shit, cash firm offer? I'll take this guy's offer all day. And I beat out all these guys. So these guys think I'm an idiot because I paid such high value. They don't know we're gonna duplex this thing. So this is how this works. We buy for 400, 20% down on this is $80,000. So I get my partners, right? If you follow me, you guys know this. I don't put any money into my deals anymore. All my partners put all the money into the deal and they get the mortgage in their name. So they're dealing with the mortgage broker, right? I do all the work though. I run the whole deal. I make sure this works just like this, how we're gonna see it. Closing costs, $10,000 for land transfer tax, lawyer fees. I went over value here. It's probably like $7,000, $6,000 for closing costs, but let's make it 10. Let's be conservative. $10,000 for closing costs to buy this property. Renovations to convert, on average, for me to do 2 units is $90,000. This is what I always tell my partners who want to come in with me on these. It's about $90,000, and that's us flipping both units, top to bottom, new kitchens, new floors, new baseboards, new doors, new electrical throughout with the wired smoke detectors. It's crazy. The code that they want for these things, they want strobe lights. When the thing goes off, it's like, it's talking to you, it's yelling at you, the strobe light's going off. It's crazy, but this is how the code is. That costs a lot of money actually for those strobe lights. So $90,000 to do the basement, legal, fireproofing, all of that stuff, and renovating both units top to bottom. So total in all of these costs on average for my partners is $180,000. I wish it was 180 bucks. $180,000 all in. And this is a 60-day project. It normally takes my guys and I 60 days to convert this property. So the after repair value, once it's a legal duplex, and we got 2 units in here, and it's all flipped top to bottom, these are worth on the market $600,000 all day long. We're getting these appraisals all the time. We're flipping them for $600,000. That's the after repair value once it's done. So that's a lot, right? We bought for 400, now it's 600. We added $200,000. So the mortgage on the new amount, right? Because we're getting a new mortgage now. We're gonna pay out this mortgage that my partner got the first one on for the $400,000. We're gonna pay that out with the new mortgage. So the new mortgage, as you know, is 80% of the value that the appraiser gives. So the appraiser gave us $600,000. We only get a mortgage from TD, Scotiabank, or whoever for $480,000, 80% of the $600K, right? If we subtract the original purchase price, $400,000, we subtract the renos my partner put in, so $90,000 plus the closing costs, so 100 grand on top of the buying costs. We don't include that right now. 400 grand minus the cash to renovate, 100 grand. We're into the deal. Sorry, I'm getting lost here. It's too many numbers, man. Subtract the price, 400K, subtract the renos. We're into the deal for $20,000, okay? So how this works, if you're lost, just like I was just for a little bit there, right? Remember, the mortgage they gave us was $480,000. If we subtract 400, we're left with 80,000. If we subtract the renos, we're into the deal for 20,000, right? So the idea is to get money back, right? Doesn't really happen in my market though. In smaller markets, you can get way better deals. If you're buying these deals way under market value, you might be more likely to get money back. But for me, my market's really hot, good quality property, so we're sacrificing a bit. So my partner's into the deal. We didn't get money back. We're into the deal for $20,000. So that's still insane. If you think about it, we have a brand new legal duplex property, state-of-the-art renovations, good quality tenants, it's cash flowing, and my partner's only into it for 20K. Like I said, ideally, we want to be in it for 0 or get money back. That doesn't really happen in my area of Kitchener-Waterloo. The market's too hot for these on-market deals anyway, for the duplex conversions. So the total equity into the deal though is 120K, right? The 480 for the mortgage, but it's worth 600, we got 120K in equity. If we were to sell that property, it'd be a profit of 100,000. Why? Well, I got to pay my partner back his 20K that he's still into the deal for. So if we sell it before realtor fees, before closing costs, etc., we made $100,000 in real profit in 60 days. But for these, we hold on to them. We don't really flip the duplex conversions. I can do that. I might start doing that here and there for some little projects, but the real bread and butter, as you guys know for me, is long-term buy and hold real estate, right? So we're gonna hold this for 3 to 5 years, make even more money on mortgage pay down and appreciation and cash flow, and then we'll cash out and make even more money. So this is a rough breakdown of how a BRRRR strategy works and how my specific BRRRR strategy works for the duplex conversions that we're doing. Anyway, I hope you liked this video. I hope you learned something. If you did, smash that like button right below. Also, hit the subscribe button right below here so you can get more videos from me 2 to 3 times a week about how to get wealthy and rich in real estate. If you want to find out more about me and how to work with me, how to get my books, how to book coaching calls, etc., get all of that in the links below, and I'll see you in the next video.